time has come for us to find out the constitutional or at least as a matter of precedent, a conventional answer to this problem.
The finance minister hints at executive action and using the money bill route to break the legislative logjam. Says time has come to set a constitutional precedent to end the current stalemate. Also continues to make a pitch for a rate cut. Says the RBI must take note of the fall in inflation.
Massive relief for home buyers and sellers near the Okhla bird sanctuary in the satellite city of Noida as the central government approves a final notification paving the way for legalizing almost 60,000 apartments. JP Infra rallies in trade on the back of that anticipation.
It's another 6% drop for the Chinese markets today after the central bank decides to offer 120 billion yuan via the routine money market to stem the equity market collapse. Indian markets also feel the heat, ending in negative territory.
Moody's Investor Services cuts the forecast for GDP growth by 50 basis points to 7% in 2015. A drier than usual monsoon is cited as one of the main reasons for the cut.
Snapdeal raises another $500 million as eBay sells part of its stake to Foxconn and Alibaba in the company. eBay quells concerns of an eventual exit, says sale to make the most of its investments.
We have also requested TRAI to kindly examine all the tariff plans and tariff packages and examine are there any tariff packages or tariff plans which incentivize the telecom service providers.
A day after telcos blamed the government for not throwing its weight behind a national tower policy to alleviate the call drop pain, the government hits back. The DOT secretary says action taken by telcos is not adequate and the government will not shy away from penalties.
Lenovo joins the Make in India drive. The technology major announces plans to roll out 6 million smartphones a year from a new manufacturing facility in Sri Perumbudur, just outside Chennai.
We launch our series on the one rank, one pension issue by telling you how the nuances of the issue are being lost among all of the noise.
जिस राज्य में जाएं, बात तो करेंगे कोऑपरेटिव फेडरलिज्म की, लेकिन आचरण करेंगे उसके प्रतिकूल। राज्य की सरकार को जलील करेंगे और हम लोगों ने शुरू से मांग रखी है बिहार के लिए विशेष राज्य के दर्जा की।
The election bugle has been sounded in Bihar with the Prime Minister announcing the largest ever special package allocated for a single state. So we all knew it was coming, but we didn't know it was going to be this big.
Oh, absolutely. It's a whopping figure, Nayantara. 1,25,000 crore rupees, which is going to be distributed across 12 different sectors, including areas like power, highways, education and tourism. And this is, of course, over and above the additional 40,000 crores that's been already allocated under various centrally sponsored schemes in the state, Nayantara.
And clearly, Subi, while the BJP is looking to make the most of the mammoth allocations, its opponents are not impressed at all. So we had a bonanza in Bihar. And we're also going to tell you about another bonanza in the city of Noida that's coming up for you later on. Hello and welcome to India Business Hour. I'm Nayantara Rai. And joining me for the next 60 minutes is Subi Upadhyay.
All right, so straight away, let's get to the big story of the day. The finance minister was in no mood to mince his words today, and he did some plain speak on a range of issues. So be it the parliamentary logjam, which he says is one of the single most biggest reasons for holding back the country, to dropping a clear hint to the central bank, saying that he hopes that the RBI keeps in mind the fact that inflation is at multi-year lows. The message came out loud and clear at an event organized by the State Bank of India in Mumbai.
Inflation is under control. and hopefully the impact of inflation being under control is a factor which I am sure the central bank, with all its wisdom, will also take note of. So have a government which has a clear mandate in the Lok Sabha. And with a mandate in the Lok Sabha, it's able to push through not merely legislation in the lower house, but it can also have the adequate support numbers to push through a constitutional amendment in the lower house. How do you then take decisions with regard to the reform process? You have executive action on which there is no embargo. You have money bills. This year, along with the finance bill, I was able to pass 7 other money bills. And I must appreciate the wisdom of our framers of the Constitution that they envisage that the money bill doesn't go to the upper house. For years to come, when governments at center will rule and the Council of States will comprise of representatives of state governments, many governments would be faced with this situation. And therefore, time has come for us to find out the constitutional or at least as a matter of precedent, a conventional answer to this problem. We have some other issues on the legislative agenda which is extremely important as far as the reforms are concerned. The changes to the arbitration law in order to minimize judicial intervention, in order to provide for a fast-track arbitration, is now pending. The bankruptcy code is on the verge of completion as far as its preparation is concerned. It will require a legislative backing. The law relating to disputes in relation to major contracts, because you can't depend on the lethargy created in Indian courts that each dispute is pending for years together before it's resolved. You will have to have a fast-track methodology of resolving those disputes. And of course, a fair law which deals with a fair sense of public procurement itself. Now, these are all changes which in the months to come will come up before Parliament.
Finance Minister also there saying that the time is now for the RBI to cut rates. It is time for the central bank to act. While we're talking about monetary policy action taken by the Chinese central bank, once again spooking global markets, fears of an economic slowdown ripped through trading rooms in China, with markets suffering another sell-off today. The benchmark Shanghai Composite Index plunged by over 6% in the last 60 minutes of trading. That is incidentally the biggest fall in as long as 3 weeks, being triggered by a fall once again in the Chinese yuan. That's after the currency weakened, after the Chinese central bank offered 120 billion yuan in routine money market operations via 7-day repos. That is the single largest amount of cash injected into the financial systems in 19 months. The Asian stock markets ended the day on a depressing note, succumbing to nerves over the possibility of a falling yuan and a deadly bomb explosion in Thailand late evening. So as you can see, look at the Asian markets, a sea of red is what we saw. And so, all this talk of a bubble in China, we're just hearing a lot more of it now.
Oh, absolutely. And here's another big view on China, Anantara. In an article written in the Wall Street Journal, which was published yesterday, Morgan Stanley's Ruchi Sharma says that the next global recession will be made in China. This is because the country has been contributing to 1/3 of global GDP this past decade. He writes, and I quote, "Policy makers have been trying to sustain an unrealistic and randomly selected growth target of 7% by steering cheap loans into one bubble after another First housing, most recently the stock market, only to see each of these bubbles collapse. End of quote. He goes on to say that global growth is stuck in the 2 to 2.5% range, which in essence is just one shock away from a recession. A 1 or 2 percentage point decline in China's growth could actually provide that shock.
And back home, the Indian markets failed to capitalize onto the early morning gains, with both the Nifty and the Sensex ending marginally in the red. So while the Nifty fell below 8,500, the Sensex lost almost 50 points to end the day of trade around that level, going home at 27,831. Banking stocks that were on fire yesterday, today succumbed to profit booking. The mid-caps continued to outperform. And you have the big political story, Sylvie.
Oh yeah, and it's a big one at that. A massive booster shot for the poll-bound state of Bihar. The Prime Minister has announced a whopping 1,25,000 crore rupee special package for a state which it recently termed as a Bimaru, or a sick state. The entire allocation has been broken up in 12 sectors, with the highest allocation going to the highways sector, which will see investments of more than 50,000 crore rupees for widening of existing highways and the construction of bridges and rail overbridges. Petroleum is the next big sector, which will see an investment of more than 20,000 crore rupees, particularly for oil pipelines and the expansion of the Barauni refinery, while a 16,000 crore rupee allocation has been made to the power sector, and that means that the state's energy concerns could well be a thing of the past. An allocation of 13,000 crores for rural roads and another 8,800 crore rupees for the railways makes up the top 5 sectors in this mega package. What's more, this amount is over and above the additional allocation of 40,000 crore rupees for existing centrally sponsored projects in the state that was also unveiled by the Prime Minister. Well, Prime Minister Modi, who wrapped up his visit to the United Arab Emirates, was clearly in no mood to waste time, going ahead and sounding the poll bugle in Bihar.
बराबर ठीक रख के सुन लीजिए। दिल्ली सरकार 1.25 लाख करोड़ रुपये का 1.25 लाख करोड़ रुपया बिहार का भाग्य बदलने के लिए 1.25 लाख करोड़ रुपया।
जिस राज्य में जाएं, बात तो करेंगे कोऑपरेटिव फेडरलिज्म की, लेकिन आचरण करेंगे उसके प्रतिकूल। राज्य की सरकार को जलील करेंगे। और हम लोगों ने शुरू से मांग रखी है बिहार के लिए विशेष राज्य के दर्जा की।
So there you go, a whopping 1,25,000 crore rupee package for the state of Bihar. And guess what? That's not the only bonanza from the government today. There was also a bonanza for the city of Noida. It's taken over 2 years, but 30,000 home buyers will sleep well tonight, knowing they're unlikely to lose their dream home in the city of Noida. Environment Minister Prakash Javadekar has announced the approval of a new eco-sensitive zone around the Okhla bird sanctuary, a decision that should be notified in 1 week's time.
मुझे लगता है कि ये एक बड़ी राहत है। जिन लोगों ने अपने फ्लैट्स बुक किए थे, अनेक लोग ये मंथली ईएमआई भी भर रहे थे और रेंट भी भर रहे थे। हार्ड अर्न मनी लोगों की लगी थी, उनको एक राहत मिलेगी, क्योंकि एक कंफ्यूजन उसमें से समाप्त हो गया।
Better late than never. The Environment Ministry has today finalized a decision that will give a green signal to all completed and upcoming real estate projects in Noida. This is crucial as nearly 55,000 flats in Noida will be deemed legal. Construction activity had come to a grinding halt in 2013 when the NGT ruled a 10-kilometer radius around the Okhla bird sanctuary as eco-sensitive. Then, on 24th of September in 2014, the Environment Ministry issued a draft proposal stating an area up to 100 meters from the eastern, western and southern boundary of the sanctuary would be treated as the eco-sensitive zone. Public comments were invited for 60 days, and by January 2015, the Environment Ministry said all objections had been taken care of. Yet, it took 8 months for Javadekar to announce the final decision. Today, as we drive down Noida, we see deserted buildings as developers await clarity from the government. Most of these projects are ready to move in, like the Lotus Boulevard and the Lotus Panache, with almost 8,000 apartments between these two projects. Even the Sun World Vanalika with 700 flats, and the Pratik edifice with 426 units are ready for possession.
It's a very positive development, and CREDAI welcomes this. We have been waiting for this for a long time. More than 60,000 flat buyers in Noida have been waiting for this for a long time. So we are very thankful and grateful to the ministry to have finally taken this call. As per the understanding that we are currently getting, is that the draft notification, which had come out in September 2014, has been approved by the National Wildlife Board, and notification is expected within a week's time.
So let's hope that the notification is as per the draft. We'll have to wait and see the final word in the notification and the distance of the economic sensitive zone, eco-sensitive zone, and we'll have to see that when do the Noida authorities start giving out completion certificates so that occupation can become a reality in this entire area. Grateful to the government for the action they've taken.
Even as clarity on the date and details of the final notification is awaited, we learn the Noida authority has promised to not hike circle rates and stamp duty in the suburb ahead of the UP elections. This is being done to provide some relief to consumers that have been financially burdened by paying both rent and EMIs. Nevertheless, the state government stands to collect almost 2,000 crore rupees in stamp duty once builders are allowed to start giving possession. In New Delhi, Nantara Rai.
Well, is the India story still intact? Ratings agency Moody's has cut its GDP growth forecast for India, citing a number of domestic headwinds that seem to be playing spoiler to the government's ambitious recovery plans. But it's not all gloom and doom for the Indian economy. Ekta Batra and I earlier were going through the details of that report. Here are the details.
Moody's Investor Services has cut India's GDP forecast to 7% from 7.5% for 2015 on account of the poor monsoon and a slower than anticipated recovery.
India is, according to our forecasts, among the fastest growing economies in especially the emerging market universe. So this is still a very high rate of growth in our view. The reason we've adjusted it down is we've looked at the high frequency data, and what we've seen is that the industrial recovery is proceeding, but it's proceeding very slowly. And we find that industrial recovery normally determines how growth will perform over the rest of the year. And we find that instead of about 7.5, it's looking like it's going to be closer to 7.
But the Investor Services arm of the ratings agency has maintained its forecast of 7.5% GDP growth in 2016. It says India is less vulnerable to the events taking place in China. Moody's confidence in the Indian economy stems from the sharp fall in commodity prices over the past year, since India is a net importer. Moody's hopes that economic activity will strengthen, even though the pace of reforms is slower than what was expected of this government. Additionally, consumption growth will continue to be supported by large income gains as inflation has fallen. Shade says the inflation print partly does reflect lower domestic demand.
Inflation has actually been a little bit more subdued than people expected. And I think that partly reflects lower domestic demand. And that, partly that was sort of something that monetary policy was trying to do to subdue inflation. You need to subdue domestic demand. So if you have lower inflation, I think that's telling you you'll have lower growth. And our expectation is that inflation will be well within the RBI's own target for next year. That's 6%.
So with a combination of slower growth in 2015 and inflation being on target, does Moody's expect the RBI to cut rates? While rates may ease further, the pressure on the currency is likely to continue.
Compared to 2013 and now, whereas the factors driving the rupee down in the years even preceding 2013 were largely domestic. They were domestic policy, current account deficit, etc. Now it's really the external environment. So what you saw happen last week was really the effect of sort of capital flows in and out of countries that were driven not by India-specific factors but by global factors. Those global factors are likely to be on the side of further depreciation in the near term, given what we're expecting with the potential for a U.S. Federal Reserve rate hike, further uncertainty about global growth. We think that might sort of put a little bit more pressure. But from a fundamental perspective, we do believe that India's external accounts are actually relatively well positioned to sort of absorb a little bit of volatility on the exchange rate.
Despite the recent volatility in the equity and currency markets and the legislative logjam, the India story continues to look attractive. In Mumbai with Ekta Batra, Surabhi Upadhyay.
One started to be the most interested party to buy Snapdeal. eBay today sold a portion of its holding in the company to Foxconn and Alibaba. But you know, that's not all. Foxconn and Alibaba have also invested $500 million as fresh capital in Snapdeal. Priya Shetna joining us with that story. So Priya, do we know how much stake eBay has sold, how much it's left with, and what kind of stake now Alibaba and Foxconn are going to hold?
Well, two parts to this one. One, Snapdeal has raised fresh capital of $500 million from a clutch of investors, including Foxconn, Alibaba, SoftBank, Temasek, and Premji Invest, among others. This not only marks Foxconn's first investment in the Indian e-commerce space, but also makes it the third round of funding for Snapdeal over the last year. Secondly, one of Snapdeal's earliest investors, eBay, has sold 3% stake in Jasper Infotech, the holding company of Snapdeal, to Alibaba and Foxconn. Remember, eBay had made a total investment of about $183 million in two tranches in 2013 and 2014. The first tranche was valued at $50 million in 2013 and $133.7 million were invested in 2014. Post the deal, we understand that eBay will continue to hold 6% of its investment in Snapdeal and will retain a right of first refusal, or ROFR, to its stake in Snapdeal. This partial exit from Snapdeal has created a buzz of an eventual exit. However, eBay has clarified that Snapdeal continues to remain a strategic investment and that this move is a part of its strategy to beef up operations in the country and revisit focus. The capital raised via the sale will help eBay to strategically reinvest in other businesses and also grow its presence on the web, that is in ebay.in, and on its mobile platform. Back to you.
All right, Priya, thank you so much for that. Well, moving on, a day after telecom companies blamed the government for not throwing its weight behind a national tower policy to alleviate the call drop pain, the government has hit back. DOT Secretary Rakesh Garg has said that telecom companies are not doing enough to curb the menace of call drops. The government has also asked the TRAI to assess if there is any incentive for telecom companies to intentionally cause call drops. Malvika Jain dials in with all the details in the latest in the tug of war.
The call drop battle continues, with Telecom Secretary Rakesh Garg accusing telcos of negligence. Garg said that tower and cell site disruptions is just one of the reasons for call drops and its percentage is negligible. According to a DOT study, in some circles, call drop rates were as high as 17%, way above the permissible 2 to 3%.
This call drop has started happening in the last 7 months. It has become very quite prominent. And this phenomena was there earlier also. So we have also requested TRAI to kindly examine all the tariff plans and tariff packages and examine are there any tariff packages or tariff plans which incentivize the telecom service providers for call drops. In the sense, if there is a call drop, they earn more. If there is, and if it is there, so then is it possible to see to it if such kind of tariff plans are not there? Such tariff plans are not there which incentivize the call drops in terms of monetary benefit to the telecom service providers.
Telecom lobby, the Cellular Operators Association of India, has made it clear that operators can't fix the situation without government intervention. They want a new tower installation law which restricts the right of municipal bodies and allows for towers to be set up on government land.
उनका ये सुझाव है जिस पर विचार हो रहा है, लेकिन हम ये नहीं मान सकते कि आप कॉल ड्रॉप की समस्या का समाधान के लिए हम इस कानून के बनने का वेट करेंगे.
In the meantime, Telecom Minister Ravi Shankar Prasad has written to various government departments asking them to allow telcos to install towers at their premises. Weekly reports will be submitted to the government on quality of service, but for now, customers will continue to live with the pain. In New Delhi, Malvika Jain.
In what will give a major leg up to the small and medium-sized enterprises in the country, SIDBI has launched a 10,000 crore rupee dedicated fund to invest in the small and medium enterprise space. The Finance Minister and the Minister of State for Finance, Jayant Sinha, were both present at that launch, and they've harped on the need for more of such funds. Listen in.
Organized large industry has created a minuscule percentage of those jobs. And this segment conventionally remained unfunded. They manage resources on their own, they funded themselves. They are certainly not responsible for the gross NPAs increasing in the banks. It's the other end of the stick which is responsible for them. And this segment remained unfunded. And therefore the Mudra Bank became, it's still an agency which will now evolve into a bank, which is responsible for creating these large number of jobs.
A lot of capital in India right now, much of it is going only into a few sectors, which are all wonderful, and they should absolutely get the capital that they deserve. And by providing funds to these venture capital firms, we think we'll be able to spark and unleash a wave of innovation to solve India's problems.
More corporate news. Vedanta Chairman Anil Agarwal insists that globally the public perception of the Indian government remains on a strong footing, and that's despite the monsoon session of Parliament getting completely washed out. We of course also could not resist asking Anil Agarwal about the Kane India Vedanta merger, especially the part about life insurance company or LIC, a minority shareholder in Kane India, the second largest, wanting a better offer, wanting a higher dividend on the redeemable preference shares. This is what Anil Agarwal had to say.
What a public opinion. And even internationally the opinion is coming, and I'm sure I'm not a political person, but if you see the public mood, it's very different. And it's something sometimes blessing in disguise, so it may come out better for them.
You know, we have seen a lot of reports that LIC seems to be, wanting to look at some changes as far as the merger plan is concerned. What have you heard from the
we see, fundamentally is that you have to create a national natural resource company. This is absolutely need of the hour. Every country at the large continent has this. My vision was to create a natural resource company which produce oil and gas, which produce iron ore, which produce aluminium, which produce copper, zinc, silver, and this is what I have done. In this process we will go absolutely as per the recommendation, as per the shareholder approval, and whatever is needed people has to do. But we have, as the intention was to create a natural resource company.
All right, that's the Vedanta top boss over there. Moving on, days after, 4 retired army chiefs wrote to President Pranab Mukherjee protesting against the delay in implementing the one rank, one pension or the OROP scheme. 3 army veterans have now started fast unto death. The move has prompted the government to swing into action. Sources say representatives of the ex-servicemen met with Principal Secretary to Prime Minister Modi, Navendra Mishra, this morning. CNBC TV 18's Ranjoy Banerjee explains why the OROP issue is complex and how the nuances are being lost in the shrill debate.
Few would know, but up until 1973, one rank, one pension or OROP was the norm for deciding the pension outlay for the retired defence personnel. But that year, the Third Pay Commission under Prime Minister Indira Gandhi discontinued the practice. And while the issue resurfaced periodically in the subsequent 4 decades, it was only after its formal rejection by the Sixth Pay Commission in 2008 that the matter gained urgency. Since then, OROP has become a politically sensitive issue, conveniently used by the 2 main national parties to win over an important electoral constituency.
The lead up to the 2014 election, both parties, the 2 big parties, the Congress and the BJP, both clearly decided that they would deliberately woo the ex-servicemen's community. There are about 22.5 lakh ex-servicemen. There are 6 lakh widows who draw pensions, family pensions it's called. They are entitled to that when their husbands die. So if you add about 4 family members to each of them, you're looking at over 1 crore people. And in some states, these are significant numbers in the voting public.
It is my right. It is visible to the blind. You have promised it. Just give it. Before the army comes down, the morale of the army drains down.
Under OROP, ex-servicemen are demanding that no matter when an officer or Jawan retires, they should get the same pension. So if an officer retired in 2000, his pension should be the same as the pension doled out to another equal-ranked officer, say in 2010. Currently, officers who have served for at least 20 years in the military get 50% of their last emolument before retirement as pension. While at face value, the demand seems fair, the issue is far more complex. For instance, if OROP is granted to the defence personnel, then wouldn't it be fair to extend the same to the paramilitary forces and the border security forces? Can we afford that?
I don't see any way that they can give one rank, one pension to the military and deny it to the other services. They will have to pay it. But having said that, it's important to note that the retiring age in all those services is so much more than the military. I mean, they all serve up to, 55, even 60 years of age. So the residual lifetime that a person has is far less than what a military soldier has.
While pension for every government employee in the country is linked to the last salary drawn and not necessarily on an OROP basis, a special exemption was made for the IAS cadre in 2008 through the non-functional upgradation scheme. This scheme was granted by the 6th Pay Commission, under which an entire batch of IAS officers in the elite Group A services are automatically upgraded to higher pay if even one of them is promoted. The rationale behind this move is to ensure pay parity across senior civil servants belonging to the same batch. So every joint secretary or secretary in the Government of India who are part of the apex scale in remuneration draw the same amount of pension as their equivalent rank officer, irrespective of the year of retirement or seniority.
There is a void there. The void is that of political leadership. Whether it is Babus or it is army, army has to be under the civil control. We don't deny it. But point is, who is that civil authority? It is elected people, not Babus who've just joined the service the day before or something.
Today we just scratched the surface, but over the next 1 week I'm going to unpack the various facets of this deeply vexing issue, and will also tell you why, after promising, the BJP government is developing cold feet. In New Delhi, Ranajai Banerjee.
But moving on from that, this tragic news coming into the national capital. India's First Lady is no more. President Pranab Mukherjee's wife, Surya Mukherjee, passed away this morning. She was 75. The news was confirmed in a tweet by Rashtrapati Bhavan. Mrs. Mukherjee hadn't been keeping well for some time and suffered a cardiac arrest on August 7th, following which she was hospitalized.
All right, time for a break now, but coming up, Lenovo joins the Make in India drive with some major rollout plans. We'll get you the details on the other side.